The IRS says if you have a business, any expense that is ordinary and necessary for you to operate your business is a tax deduction. So you have a podcast. These mics are ordinary and necessary. So these mics, you pay for these mics. These are tax deductible. The camera is tax deductible. All these expenses related to your business, you get to write off. Now, the dope thing about that is when you first start a business, a lot of your personal expenses that you were paying for anyway immediately become tax deductible business expenses. For example, your cell phone. If you work a W-2 job, you can use your cell phone as your job all the time, but you don't get a tax deduction. The moment you start the business and use your cell phone to call your customers, guess what? Your cell phone is now ordinary and necessary to operate that business. So now you get to write off a portion of your cell phone bill. So now 50% of your cell phone, 50% of this iPhone and 50% of the cell phone bill is now tax deductible in your business.
This is real basic level tax planning, but it's still an important concept. When you first start your journey as a business owner, the concept we always hear when you're talking to a friend or someone who owns a business is they say, I write that off. That's a write-off. I can deduct that. So what business owners are trying to do is find expenses that are ordinary and necessary, that are on the personal side, money that you're spending anyway, and moving it over to a business income. This is a great strategy because now when you move it over into the business income, it's tax-free, so to speak. You are reducing your tax bill. There's some really great examples of this. Obviously, the cell phone is one, might be a laptop, camera equipment. It could be your vehicle that you didn't get to write off before, and now that you have a business, that's a business expense.